The Big Four banks swiftly announced they would match the Reserve Bank's recent interest rate reduction, which will save the average borrower $100 per month on mortgage repayments. For the first time since June 2023, the cash rate has been lowered by 25 basis points, returning to 3.85%. With both headline and underlying inflation now falling inside the RBA's 2 to 3% target for the first time in 4 years, home borrowers were provided relief for the second time this year. As higher interest rates have been working to bring aggregate demand and supply closer to balance, inflation has fallen significantly since the peak in 2022, the RBA stated on Tuesday. It's very good news that price increases have slowed and are fairly broadly based, Reserve Bank Governor Michelle Bullock told reporters. With the most recent rate fall, the average variable home loan rates with the major banks dropped below 6%, saving an owner-occupier borrower with an average $660,000 mortgage $107 on monthly installments. ANZ was the first of the Big Four banks to declare that it would lower its variable rates by 25 basis points in order to match the RBA's most recent rate drop. This indicates that on May 30th, its online-only rate will drop to 5.59%. 7 minutes later, Westpac matched ANZ's lowest online-only mortgage rate, which was effective from June 3rd. Soon after, the Commonwealth Bank matched its rivals, and on May 30th, borrowers received relief. On May 30th, NAB's lowest online-only rate will drop to 5.94%, although borrowers who have a small 5% deposit can still take advantage of it. As borrowers face the most rapid pace of monetary policy tightening since the late 1980s, Ms. Bullock recognized that the 13 rate increases in 2022 and 2023 were difficult for them. I understand that many households and businesses have found this time of relatively high interest rates difficult, but it was crucial that we lower inflation, she said. However, she said that because inexpensive goods that were normally headed for the U.S. were dumping them on Australia, Donald Trump's tariffs were expected to lower inflation. Though there is a risk of inflation on the other side, we have determined that global trade developments will generally be disinflationary for Australia, she stated. Some import prices may increase as a result of supply chain problems brought on by the trade policies. The most recent rate drop, according to Treasurer Jim Chalmers, is a welcome respite for families. He stated, "We are very happy to see more assistance for hard-working families with a mortgage." It acknowledges the uncertain global environment and reflects the significant and consistent progress we've made together on inflation. Borrowers will have more money to spend, according to Angus Sullivan, Group Executive for Retail Banking at the Commonwealth Bank. For many Australians who have a mortgage, today's decision will help to deliver some much-needed additional relief, he said. When paired with the rate drop in February, this adjustment should help homeowners who are in need of additional cash flow. We will appreciate that extra flexibility, as we know many have had tighter budgets in recent months. Additionally, the Reserve Bank has loosened its stance on inflation, making maintaining low unemployment its top priority. The board is committed to fulfilling its mandate to provide price stability and full employment, and it will take any necessary actions to accomplish that goal, the statement read. Although headline inflation has dropped to 2.4%, the Reserve Bank anticipates that the Consumer Price Index will reach 3% by the end of 2025 and 3.1% in June 2026, following the expiration of the federal government's prolonged $75 quarterly power refunds in December. Additionally, it was predicted that unemployment will increase from 4.1% at present to 4.3% by Christmas. Ms. Bullock stated, "The board's strategy for a long time has been to reduce inflation while avoiding a sharp rise in unemployment." Financial markets believe that the RBA will lower rates to 3.35% by the end of this year, and they viewed a rate decrease on Tuesday as having a 96% possibility. That would mean that Tuesday's relief would be followed by 2 further rate cuts. However, given the uncertainty surrounding headline inflation following the expiration of the government's $75 quarterly power subsidies, Brendan Rinn, chief economist at KPMG, stated that only one additional rate drop was expected in 2025. A clear picture of headline inflation will re-emerge once the government's cost of living relief rebates and packages end, even though some argue that headline inflation is entrenched below the target band midpoint, he added. After 13 rate hikes in 2022 and 2023 sent the cash rate to a 13-year high of 4.35%, the Reserve Bank has so far lowered rates by 50 basis points in 2025, offering respite in February and May.